Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Avoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We have a couple of red folders which were over the midnight hours, over the night. That was with the Swiss franc, and after that, everything seems to be pretty much stabilized and nothing too exciting today. A couple orange folders here at 8:30 this morning. I don't know. We usually pay some unemployment claims on the U.S. Probably not a lot of big movement on that. But other than that, nothing too exciting. We'll check out which currencies are strong, which ones are weak. Right now, looks like on the 30-minute and 15-minute time frame, we have the U.S. yen and British pound are strong, and the Swiss franc, Aussie, and New Zealand are weak. So trade those three to the strength: the U.S. yen and British pound, and to the weakness of the Swiss and Aussie. I try and stay away from the ones that are in the middle. And so let's go to the charts. And let's see where we at here. There was a NASDAQ. We got the NASDAQ loaded up here. Right now with the NASDAQ, we'll just kind of take a peek at that, where this thing's going or what it's been doing. Yesterday, the S&P had a pretty big move to the downside yesterday. The question is it going to come back and retrace? How much of that's going to retrace, or what is it going to end up doing? But this was yesterday's high. This was the low. NASDAQ was pretty much the same picture of this and had a strong move down. I'd had like the NASDAQ, S&P had about a 50 pip move yesterday. But right now it's coming right up into this middle threes, the three target zones that we're looking at. So it still has potential to still go back further to retest the lower part. But it could start breaking up and start retesting the high for yesterday. So really right now we have no real clear direction of which way it's going to go. If I go to a 5-minute chart and see about price action, you can see that it did leave the lower 25% zone, came back out, retested, gave us a little bit of a wedge retest. So here's our bottom wedge. And right now it's making a high, coming up right at our first target zone of the three orange levels. And we'll see if it can break above, go up higher. If it doesn't break above, look for a possible retest. So this is going to be a critical area right in here. And basically I'm looking for a 5-minute chart to come up and close above this, and then look for a small little pullback to have it go up to the higher next level. So if we get a close above, some just raise here, have a little bit of a pullback, maybe retest the trend line, and then going up to perhaps test this area like that. So that's the picture I'm looking for. Here's the anchor, here's the hit, here's the possibility retest. We don't know where that's going to be. We don't know how high this is going to go, or how. Right now it's right on the line, so we'll see if it goes higher. And then we don't know if this one's going to go stop here and then go up, or if it's going to come down and retest the trend line. So this is where we don't know, but we're going to just kind of draw out what we're looking for to see if we can take advantage of that when the time comes. Let's see, you see there's a question here.
Yep, right off the bat we have
3 U.S. pairs in heavy drawdown.
Yeah.
Swiss and Euro, U.S. How much percent is in loss? Okay, so we have 3 U.S. pairs: the U.S. yen, Swiss, and Euro. Well, let's take a look at one at a time here. Let's go Euro U.S. Are you in sell positions on all or buy positions on all of them, or is it mixed?
It'll take them a minute to type out.
Yeah, okay. I'm going to guess you're in a buy or sell and sell on the first two. Okay, sell on the U.S. yen. Okay, so basically you're short on the U.S. dollar, and it's going against you. The dollar is strong, so it's going up, and the euro U.S. is going down because you're in the wrong direction on that one. So let's see. Let's look at a little higher time frame here. The U.S. dollar is very strong right now on the euro U.S. As you want to see, basically we're looking now to do is trying to find out where the bottom is, where this thing could resort back to. So I'm going to go on I'm thinking you may, I don't know if you're in a program trade with like the variable or gearbox, but anyway, this is what I'm looking at. Looking to see if this is where the dollar is getting stronger as it's going on down. If you're you're probably in a buy position on this one, I'm going to guess. So if you're in a buy position and it's going down, that means basically what you're doing is you're probably picking up extra trades on the way down. So with this in mind, we'll start down here, draw and see where our 20% lower. Right now it's coming right in coming at the bottom third of this middle zone. And this is probably going to be a replay just on the opposite direction on the others. So I would just take it from the low, which is probably somewhere around March 26th. I'm not sure how long you've been in these positions or where you got in or where you got out, but I'm just going to show you where I'm looking that this thing could turn around for you. I would be thinking that you're going to start getting maybe some bouncing off of this little area. Here's the lower 25. It could still, it still has the potential of going down lower, but right now it's, this was May. This is basically, let's see, this is June. This is the first week of June. This is the second week of June. Yeah, right now it's pretty much testing. It's pretty much testing the low, the May low, and it could be. This is a strong move down. I guess the good news is this is a real strong straight shot going down, which makes me think it's going to probably find an area and then it's going to bounce. It could be bouncing right off of here. This would be another area right in here that I'd be looking at possibility of it to come into. This would probably be the first area. And if you're in the drawdown, if you have room, you may want to start taking maybe another buy in this area. Now this is the lower 25 right in here. Here's the lower 25, and here's our, and you can see it's coming right up into the top of where this zone is right here. Here's a nice little rally, a little base, a rally. This was a little bit of a retest of the base and then it took off. So this is where this green candle took off, crossed over the moving average. And so this area right in here would be a key area to be looking for a bounce off of. It's coming right down. So right in this area. Let me just change the color on this one here. I'll just mark this one as the yellow one so that you can see where this would be an area that I'd be looking at possibly to, I would, if you can afford to have your stop on the other side of that, I would probably put the stop somewhere into this blue zone. Yeah, I'm not sure where you got in, but I would be looking at maybe being a buyer down in here, maybe another buyer down in here, if you have the room.
He says he's been in this since last night.
Oh, you've been in since last night? Okay.
Yeah, so and he said he's already in 20 to 25% drawdown. It's hard to open new entries, of course. Yeah. You're reluctant,
Hopefully your position size was enough to, you just didn't put stops in, I don't know. No, since last night. Let's go back to a smaller time frame chart here.
He's saying that he copied these from a variable account. So I'm assuming you put these on manually, Kevin, based on what variable was doing.
This is last night. So right now, this is a zone I'd be looking at coming into. We did get a little. Where's our orange? Here's our orange. It's. I think you're going to start seeing some bouncing off of this area right in here. So I'd say just be patient and start looking for the turnaround. If you get too much deeper in here, you may just want to close it out and wait for it to get done coming down. And this thing still has some room to go to the downside still. And the others are probably going to be much the same. Let's see what the US yen. You're getting down to pretty much of a target area where things could start reversing. That's usually about the time when you can't take any more is about the time where it wants to reverse. If you got into this one, it was sell. So you're looking at the dollar strength and or the dollar weakness.
Kevin is saying that this pair and the US Swiss are the two that are in the most drawdown out of the three.
And you got in last night sometime.
Based on variable trades, he took them manually. So variable, of course, is counter trend.
Yeah, variable's counter trend. So I'd say if you took it manually with variable, that I just kind of keep following variable. Variable's been doing very well for me anyway. And I'd say if you're following the variables entries, then you may want to be following their exits as well.
On this one, I think he got in at right after the huge candle. The looks like the long right after overnight, like overnight for us. You see this great huge green candle to your left?
Oh, this one here.
Yeah, no. I think
the other left. This one?
No. I'm not sure which huge candle. My eye went directly to the one that has the arrow on it, the longest one, right over to right before like yesterday's money zone, right after yesterday's money zone.
Oh, this one.
Candle. Yeah.
That one.
Yeah.
Yeah. Yeah, so I don't know where you got into this thing, but I would say right now you're looking at a pretty much of a basing turnaround point. Here is the rally, base, rally, and we haven't really had the break of this pivot low, which is where the high. So right now it's basing inside here. I would expect to see probably maybe a bounce off of this to come back down, take out this a little bit. So it's a contra trend trade, that's for sure. So I would say if you got in with, my suggestion is if you get in with variable, let variable lead you out of it. That's variables are doing very, very well. I don't trade that particular pair on my variable.
Do you mind, Kevin, if we ask you what position size you put on that trade? Like, is it a 0.01 lot that you've put on there?
Now the US Swiss. I don't have that one either. CAD Swiss. Nope, I'm not trading any of those on the variable.
Ooh, 1.41 he's got on there. That's really high.
Yeah, if you have, well, I don't know what size your account is, but if it was more than 2% of your account, then you overtraded it. That's about all I can say about that. I would say hang in there. It's right now you're looking at a top. I expect it's going to start correcting a little bit. I'm not sure what how much it's going to have to correct in order for you to get out of those things, but it's got a little ways to go. I mean, it's going to have to be when they go up this hard and this. A lot of times they come down that hard as well. If you can hang on to it that long.
Yeah, because it's been going sideways here now for a while.
Yeah. And let's see. That's about all I can say about it. Now, U.S. Swiss, I'll take a look at the U.S. Swiss as well. It's probably going to be the same type of thing.
He's saying that at 110.40 he can get out, which isn't too far away, really.
Yeah. I say hang in there. Variable's really pretty good about getting out without having too many positions. I say most of the time my variables are, they only go about 1 or 2 positions deep, and it usually gets me out profitable. I just kind of let variable on, just let it do its thing and call it a day. I don't mess with it at all.
You got to watch your position sizing though. Like
yeah. Use that pip calculator. If you don't have the pip calculator, email me and I'll send it to you. But use that pip calculator; it'll keep you out of trouble in a big way. Yeah, right now you're looking at the U.S. Swiss. This is right here on an upper zone. I would expect to be getting a little bit of a bounce off of that too. These are all pretty. Let's see, how big is this move here yesterday? Yeah, there was some really big moves yesterday. This was 100. Well, just in the last 2 days. I guess this was the day before. This thing's ranged 184 pips in 2 days. I'm not sure what the average range is. U.S. Swiss average is $81. Actually, the average is about 57. It did 81 of 57, so it's not a big move. But you're coming right up into a supply zone, so I'd be hanging in there and looking for the first pullback on this one. I'd probably be looking at somewhere around this area, and I'd be looking for a target of somewhere right around 90, 80, 0.9090-ish. The first 38% or even the 23%. If you can get profitable, I just get out of it. If you're profitable at the 23% retracement of this. And that's about all I can say about it. Good luck. I understand the pain. I've been there. Just be careful with your position sizing. It'll get you in trouble real quick.
I just sent you the email address, Kevin. If you could just email Alan, he'll send you that calculator that you can use it going forward.
And let's see what else we have here. Looks like let's check out the S&P. I'm in one of those trades. Did a little bit of a swing trade with it yesterday, and it's not. Again, the S&P had a really strong move down yesterday. And one thing I want to show you with the S&P, which I found rather interesting, is that we don't know how high is and how low is going to be. But if you put this thing on a daily chart, and you're going to see that from all the way back in May, the low in May had a strong move up and had to pull back. This was in June. This was actually this was May. That was May 13th. This is May 13th, and now we're into June. But this from the May 13th low, this was the June's low, and it made a new high, and made a new high in May, made a new high in June. And now it's coming back to retest the low of the month right now, which is right here. And so I'm drawing my fibs from the month low to the month high, and I'm looking to see where it came. And it came right back, and it bounced right into this upper 25%. But I can see where this would be the second hit of the. Well, here's the anchor. Here's the first hit. Here's the retest of that third hit. Now we're going to see this thing could come back down and retest this trend line right here, which is going to put us right in the middle of this blue zone. The blue zone is from the June low to the June high. Spread it out a little bit. And you can see right now this is, it had a little bit of a base. It came right pretty close to it yesterday. Here's a little wedge. It came, let's see if I can pull this up here a little bit. It came very close to coming into it, pulled back up, came back up into our upper. Now, the Fibonacci's are from the May to the June high, May low to, the June 5th low to the current high. And this is the zone. It came back all the way through, kind of retested it, and now it's basing right inside here, this lower third of these orange lines. You can see it's just kind of range bound right here. So right now I would expect this thing to still be kind of retesting this. Can take this trend over here. Here's the anchor. Here's the hit. There's the trend line. And we'll see if it's going to come up. And then you also have a trend. Squeeze this up a little bit here. And so this was this was sort of like the origin of the high before the big move down. So we have another little range right from here, which is right at this orange line. So if you're going to be looking for the up move, I'd be looking from here and looking for this as the first target, which is going to be right around this orange zone. So I'm going to remove the Fibonacci's on this. And so you see, if this thing's going to start making new highs, it's going to be looking for targets. The targets could be based on what the targets were before it had another drop. So if I'm going to be looking at, so right here, it came up, it broke, closed above, came back down, retested it, came up. Right now it's retesting this little area right up in here. So I'm going to take these Fibonacci's on my lower time frame, and I'm going to draw it from the last hit of the trend line. And I'm going to use this little pivot area over here because I'm going to be seeing if this thing is going to come up and retest this trend, I want to see how high is. And I'm going to be looking at pretty much right around in this area. I can maybe pull it down just a little bit just so I can see where my wicks are. And then I'm going to be looking at this being the intermediate, the lower time frame target area right up in here. So I can probably I can just use the bottom of the zone. This will be a target area. And then we have our 3 lines from here into the other zone. So right now it's coming right up. This little moving average is same in line with the orange one. And now we're looking at this thing coming down to possibly retest our trend line. So we're going to have some, I think probably some very narrow swings today as this thing's it's starting to trend on up a little bit. It's going to come back down. It's going to be all over the place. But right now it's hanging in between these 2 orange lines. And so that's the area that I'd be looking at trading it now for today as if you're trying to look at scalping or trading like this, that's what I'd be looking at. You can see where it formed a little zone right above here. We have our zone right here at the orange line. This is a pretty strong green line. There's a pivot low. And we'll see where it comes into play with this lower 25. So right now I'm looking at this blue area up here, or the yellow area. And I need to get my charts back get my colors back again. Hang on just a second here. I need to get my color pattern here so when I changed it. Insert shape. I'm going to get my colors back so I don't confuse everybody. This is how you can change your colors back. Just get the numbers that you had on the one that you want, paste it, and then you've got your colors back again. Okay, so let's go back to business here. So for the up move, we're looking at the upper zones, which is going to be right up in here. These are the middle zones for the new blue lines. You have the orange overlying the blue, and you can see where the orange and the 38 are together. The 88.2 is the same as on this one, but this is going to be I'll mark the middle zones on this. So this would be the 38, 50, 61. This is going to be the zone that we're going to be looking at where we're going to probably start getting some bouncing off of that other range. And you can see it bounced right off here. And right now it's coming back down to retest the trend line. We have the trend line here. That was where the original trend line was. And we have another little trend going on from here. Here's a high, here's a low, here's a high, here's our trend line. There's the anchor, there's the hit, and we'll see what it does right at this point. This is going to be a little bit of an energy point right here. This is a trend line. We'll see where that's going to be. See how if that holds or if it's going to break down to retest the lower trend line. This is going to be a little bit of a, if it breaks this, then we know we have a little bit of a support there, and we can maybe move our Fibonacci's up higher for a pullback to keep on, see if it keeps on trending on up. That was a pretty strong move up. Now this is a pretty strong retest. This area right here is going to be a key area for us to be looking at. This little area right in here. And that's right. You can see right. That's where the hit of the trend line was. Now it's coming hit. It looks like it's rejecting a little bit. Let's see what I got here. Right now I'm stabilized with the long and a short both on this. I'm waiting for this thing to come back down and see where the bottom's going to be to retest our highs. Like I said, this thing could very well come back all the way back down here to retest the low, yesterday's low, which was right down here. This was the overnight low. Yesterday's low was right here before the close of the market. So we have this little area right in here is going to be significant. I just check and see what points are significant for, like this was the day break and then we had a new low for the day. So this little area right in here is going to be a significant area, and that's right in an area where this thing could trend to bounce off the trend line. And we don't know if this thing's going to go higher or lower, but it's going to tell it eventually it's going to do one or the other or both. I said this was, if you look at this little move right here from yesterday's, from the open, came way down. I mean, this was a big wick. This was all over the place in a relatively short period of time. Within a couple hours, within 2 hours, this thing ranged almost about $37 in 2 hours. That's a big move. A lot of volatility. A lot of buyers came in right here. A lot of sellers pushed it right back down again. And now the upper trend line on this is going to be from the high, the overall, and this is going to be this is pretty much what it's doing right now. Here's our anchor. Here's our hit. Big move down, and it will probably come back and retest this area. It'll probably come down and retest this area right here.
A big wedge.
It's a big wedge, but there's a lot of, and this is where the scalping could really help. If you come into this little area, buy it off of here, try and hold on to it, either hits this line or this line, then sell it again. But right now, this is the range it's trading in right now. And that's a $60 range, you know, from the bounce, from this bounce to here. That's about half, about $34. By the time it gets in there, it's about $34. So there could be some really big moves. And if you're trying to scalp this or you're trying to take big positions, you better be getting good entries, or else you're going to be having some heavy drawdown. And right now, it's testing this little area right in here. You see this big wick right in here. That means, let's say that this is where there's a lot of buyers, sellers pushed it down, the buyers pushed it right back up again. Sellers pushed it down, buyers pushed it up, but not quite as high. Pushed it back down. Now the buyers came back in again. Sellers are pushing down. So right now there's a lot of selling pressure right up and around in this area. And this little range right in here. So that's how I'm playing this one today. I may not even play it. I may just, right now I'm just positioned where if I can get my shorts positive, then I will close them out, and then I'll let in fact, there's a little bounce right here. I am in this, I do have a couple of short positions just to stabilize it over nighttime to see what was going to happen. There's the bounce. Okay, and this is going to be a head fake. It's forming a little bit of a wedge. I still want to see the moving averages get in the right direction on here. And right now they're not quite ready to go yet. Just be patient. Let it tell us what it's going to do.
A question for both of us, Al, actually, in the Q&A from Mosen. He wants to know how we got into trading.
Just your desire. I've always been interested in technical analysis ever since they came out with technical analysis back in the late 70s. And I've just been interested in it ever since. And I keep on reading books and learning about how to do it, follow people that I trust and follow people that can help me improve. And it's become somewhat of addicting. It's a means to, I don't trust brokers. The only person that got broker was me. And so I decided to learn how to do it myself. And there's the big key to, like I said, trading is like sitting on a three-legged stool. There's three things that you need to be able to do, and any one not there, any one leg that's not functioning, you're going to fall over. And that's the technical analysis, understand the technical patterns. That's one leg. The other leg is the money management, which many of us have learned that you have to have proper money management in order to keep the emotions, which is the third leg. And the third leg of the emotions of trading is the hardest nut to crack. That's the one where your brain tells you to do things that you really shouldn't be doing, and you just can't help yourself because your brain isn't trained enough to be able to be disciplined enough. And that's why I keep stressing: be disciplined, find a method, just do it over and over again, without question, and get the discipline, get the money management, and get the technical training. To be on that three-legged stool so you don't fall over and you can become profitable. That's the thought for the day. Stay on your three-legged stool.
Now, how I got into trading, I got interested in the stock market about 3 years ago when Canada was starting to legalize pot. I thought, hey, why don't I get into some cannabis stocks since things are moving that way? And it worked out for me. So that piqued my interest. And then to solidify everything at the end of that year, my investments took a real nosedive with my financial guy. And I thought, you know what? I can lose my own money. I don't need someone to do it for me. So I thought that's when I decided to learn how to trade. And here I am. So that's how I got into it.
We all have a story, and some stories are better than others, but nonetheless, we all have a story. So right now what I'm looking at with this, I'm looking to see where this pullback, we had the bounce, we had the breach of this trend line, we had a bounce off of it, but now we're trying to figure out where is the next. There was a nice little drop, a little bit of a base here, another drop. There's a little bit of a pivot there. I don't know that I want to use that because that's awfully steep. That's an awfully steep little pivot. So I'm really looking to see where this thing may come up and retest the trend line again. So this is a stronger, I like this little stronger move better. So I'm waiting right now. I'm just waiting to see how high this thing goes until it pulls back and then maybe retest the trend line again. And it's either going to retest it to the downside or it's going to break the trend line. You can see this getting, there's a little bit of a high. See if it comes back down, retest this low. Now this trend line from here, it did break the trend line, but it's still it's still within this little gray shaded area, which is going to be right about in here. It's still within this shaded area. You have a green zone right here, and we're going to use that zone because I think that's a significant area. So right now it bounced off of there. It's coming back up to retest. We can actually move this trend line down a little bit since it made let's see, here's a flat part here. Let me see if it's trend line I got. So here's the low. Here's where our anchor was. This is where we drew our Fibonacci. Let's see if it can come down and retest that. Let's look at this on a lower time frame. So this is really the marker that I'm looking at. We did have this little hit here. It did come down. But right now we're still waiting to see where the pullback is going to be. Oh, let's see, what do we got here? See, that's a stop loss on my buy, I think. We'll double check that here real quick. Yeah, we're good. So we're still waiting to see where this thing's, oh God. I'm still waiting to see how high where this thing goes. Right now, there's a little bit of a zone right in here that we want to be paying attention to as well. That's where the drop, this is where we had the drop, a little bit of basing, then a big drop again. So this could be a little target zone right in this area. Taking time on the S&P because I'm not seeing any other trades coming up here. And see right now with the moving average, right now the blue moving average is holding. We do have a little cross of the green and the yellow on our 1 minute chart. But we'll see if this thing can curl around, come back down, and then retest this little pivot below right here. It's just a strong move down, strong move up. Here's a pivot, came back up, tested it, broke the pivot, kept on coming down, retesting this zone, which is our lower 25%, came back into that. And we'll see if what it's going to do now it's going to have to break through this and then come on up to maybe retest the upper part of this area. But right now, we just don't really have a real good handle on what it's going to do. It is getting higher lows and it is getting lower highs. We just don't know where it's going to break to retest this area up here. So right now, there's a little bit of a pivot right there on the moving average. And we'll see if this is going to hold to retest this little bounce right here. This bounce happened until 9 minutes ago. So it took 9 minutes for it to go $4, the $4 move. If you're trading futures contract, that $4 move would be $50 per dollar. And that'd be like a $200 move right there in 9 minutes. It looks like it's coming back down. It's going to retest this. This was a nice little strong move. I like this move up. It bounced out of this little zone, came back up. And we'll see what it does. And you can see that it's still inside the orange lines. Now, if it breaks this trend line here, if it comes back down, it breaks and gives us a little up, back, then we could maybe have a target to go to the long side. But right now, it's just kind of range bound between here and here. Let's see, here's a British CAD. Let's see what that looks like. Anything there? There's a bounce, retrace, there's the arrow, retrace. That arrow is not really a valid arrow. It's in two different zones. Nothing there. Let's see what it looks like on a 15-minute chart. Looks like there's lots of room to the upside based on this, but we do have that little zone right there on the 5-minute. So if it can break through this zone to the upside, British pound, Canadian dollar, Let's check and see what the heat map says. Pound Canadian. Right here, the pound Canadian, they're both right up, they're both strong. Both right next to each other, right next to each other, right next to each other. No trade. Just too tight. If it breaks out, then we could have, look and see. If it breaks out of this little zone right in here, we'll see what the next zone is. Go to the next higher time frame. No zone above, no zone above, no zone above, no zone above. Must be making some new highs. There we go. There's our, finally we got our zone. So we have our zone right up in here. This is on a, I had to go all the way to a daily chart to find the red zone where it was. So it's not at its all-time high. But while I'm here, I'm going to go ahead and put my moving averages on. And I'm going to use this pivot high. And so here's going to be the anchor. Here's the hit. Here's our trend line. That's a higher time frame trend. That's what, and when these things are, when you can't find zones, you have to just keep going to the next higher time frame until you find it. And if there is none, then you just have to find out where the all-time high was before. And I've gone back a couple of years before I found the zone. And that's okay to do. Here's a little bit of a zone on the bottom. So here's where here's the green zone. Here's our red zone. Here's the last pivot low. So we use that on a daily chart. So this is the range it's playing in right here. Here's my anchor. Here's my first hit. There's the first hit. Right now, this is the zone it's playing in. If it breaks this trend line, this is the area it's going to be coming up into. So I'll mark that. So the fact that this is the range that we're in, I'll draw my Fibonacci's off of this pivot high and this pivot high where the hit was. And we're going to use that for our Fibonacci's. So here's the last hit. Here's the last hit. This is just another way of drawing those Fibonacci zones. People ask, is it what time frame to use it on? You take whatever time frame you need to get it, to get the picture. Here's the bottom 25. Here's our day. Here's our metal 3 zones. This thing's not ready to take a trade on yet, but we're just setting the stage here in case it gives us something here today. Okay, now we can go to our lower time frame and see what we have. See if we have a price action that gives us some picture that we can look at. Here's our picture. Here's our first zone right here. So if it can break through this, we have another little, you can see it's starting to build a wedge. Here's a high, here's a low, lower high, higher low. It's building a little bit of a wedge right in this area. So basically our moving averages are saying it's all consolidating right in here. But if it can break that zone right there, that orange line, if it can break that, if you look at on my 5-minute chart, you can see it came up to the orange line. It wicked up, did not close above it. That tells me that this thing may come back down again. And this thing came back down probably about the 50% of this range. So if I draw out another Fibonacci line from here to here, which is going to be inside our orange lines, but this is the last pivot low, I can draw the other Fibonacci from here to here. Find out my upper 25. And right here is this is the other zone. This green line, this green zone right there is right in the middle of that, the middle 3 of this lower time frame. and we have a trend. Here's a low, here's a higher low. It hasn't broken that, so it's just a little bit of a wedge going on right in here. We're just narrowing it down. We're just putting it under the microscope to lower time frames, seeing what the action is, and then see if, because we're only looking to get 5 or 7 pips out of these things. But right now, the whole zone, let's see what the whole zone is here between here and here. Now you've got about 23 pips, which is real marginal as far as the trade goes. So we just stay out of it until it gives us the picture we're looking for. So if it comes back down to, this would be our target. I went 15 pips. So it's going to, I would say we can get a bounce off of this zone like we did here. We can get another bounce. Let me take these other Fibonacci. Since we're on a 1-minute chart, we have our zones figured out. I'm going to redraw the Fibonacci for the actual trending of it and see if we can get into this trade. Oh, missed it. Delete that one. Okay, so now we're looking to see, I'm looking for a strong push up. Here's the pullback. But right now I want to see it come back down towards here. See what kind of a pullback we can get. See what kind of range we had. See what kind of pullback we already had on this one. So if here's the range, this was a drop, base, drop, and now it's retesting this little area up in here. I want to see it come back down a little bit more. So basically with that, I'm going to note that area, but we're going to wait and see where, we don't know where this thing's going to turn around, but we did have some buyers right here. Here's the wick. You come all the way over here, you beat the body. This little area right here is significant. You have a little bit of a body up in there. And there's a wick, comes into another wick, comes in. This little area right in here would be an area where it probably gets some turnaround right at the red zone. So basically you could hopefully take it short up here, retest down this way. But right now this is the zone it's in. And you have 2 red zones above, 1 red zone, 1 green zone below. So it does have more of a downward trend to it, but it is reversing. We don't know how high it's going to be. We're going to project up here by the trend line or by the zone. See if we get a bounce and maybe try and take it short up there if everything looks good. But right now, when we looked at our heat map, the British it was the British and Canadian. Now the British is starting to get some strength on this. This is on the 5-minute. So the British is now getting a little bit stronger than the Canadian. British is stronger than the Canadian. British is stronger than the Canadian. I like to see a split of 3, especially on the 5 and 15. And right now we have a 4 and a 2, so that's only a 2-point spread. But it is favoring right now that the British pound is getting stronger to the Canadian dollar. So with that, the British pound is getting stronger. We would be trading to the strength of the British pound. And since that's the first currency of the pair, we're going to be taking it long with that strength. So we're looking for pullbacks for it to go up higher. And then this would be the target zone. And if we take it into this area right here, this is the lower 25. Let's see if we can make something out of this. Here's the lower 25, and here's our middle zone. Here's the high, here's low, we're just going to mark this here. I'll tell you what, do this. Here's our this is our entry zones right in here. If it can pull back and give us the picture we're looking for, then the question is, do we have enough room to the trend line for our 7 pips? Yep, as long as this keeps pulling back a little bit more, see where it pulls back. If it can pull back to this little area right in here, we can possibly take this trade, but I would take a buy stop on this one as it comes down closer to this area. But right now, this is a nice little move up. It's pulling back to the 38%. It's got some upward trend. The British pound is getting strength to the Canadian dollar. And we'll see what it does. We actually might have a trade here. Green's coming back down to the yellow. Right now, it's not closing. It hasn't crossed over. We got consolidation going on right in this area. It pulled back below the 23, it pulled back below the 38, did not close below the 38. I'm going to mark and see where my 5-minute candle is going to close. I'm on a 1-minute chart, but I'm going to mark and see where my 5-minute candle is going to close. And that's going to be right at, let's see, this is second right here. When the price gets to, when the candle closes just before it hits this blue line, that'll be my 5-minute close. If I can get a 5-minute close down in this screen, in this zone, we'll just wait and see what happens. Nice little pullback. This candle is the beginning of the 5-minute candle. So right here, if we get it close below this, that means it's still making lower lows. If we can get a 5-minute close above this, and we have room to the upside. Just barely. Let's see what the price action does. Right now, it sort of has this got a little wedge going on right in here. Here's a higher low, higher low, higher low. This is a higher low rejection. This point here, let's see what it does in this little area right in here. We have about another 30 seconds. If I take it long up here with a buy stop, then my stop's going to be down below this zone. Because if I'm right, it'll keep on going. If I'm wrong, it's going to come back and take me out with a very tight stop. There's the close. Here's the pullback. Testing the trend line. And the British pound is still stronger. Oftentimes when we watch candles, that if it's going to go higher, the low will come in first and then it goes up higher. Right now the low is coming in. Took out all these pivots. And it's coming down to pretty much retesting this lower 25. All right, the low just came in first. Pull back to the 61% of this move up. We still have a target zone up here. The British pound is still stronger to the Canadian. Nope, the Canadian just took strength. I look at our heat map. The Canadian dollar just took over control of the strength on the 5-minute chart. So now it's strength to the downside, strength to the downside. Right here, they're pretty much even. It's bouncing off the 61. It's still higher than this pivot. So right now it had a low, came into middle zone, went up higher, came back into the middle zone. See if it goes lower. If it goes lower, see if it comes back to the middle zone. If it goes lower, we can maybe take a trade from here on up to this area and possibly get 7 pips out of it. It'd be kind of tight. I like it better off of the bounce off of the here to the upside. I like it, but I want to see the confirmation first. We do have a arrow, but looking at the zone here, this is not a bag trade because it didn't bounce off of the red zone. This one was a bag trade, but the zone was right here, too close. Came back up, retested. Now it's making higher lows. We did not get the close. We're looking for a 5-minute close. Let's see, what time is it? It's another 2 minutes. We'll see if the 5-minute candle closes below this moving average, this Fibonacci line right here. If we get a bounce without a close below it, then we can maybe take it long and maybe use the middle of this for a stop. Right now, even the 1-minute candle has not closed below this blue line. It wicked down, but it didn't close. Looks like the S&P is dropping a little bit. Dropping into our green zone. See if any of these are profitable. Yeah, that one's profitable there. Any questions?
Can we have a look at gold, Al?
Okay. Give me just a second here. I'm checking something out here. Okay. Looking at gold. Our buddy gold.
Mm-hmm.
Hang on just a second. I want to close this one out here. All right. Well, we don't know where the bottom is, so we have to keep going to higher time frames till we find it. There we go. There's the green zone right there. Big move down on gold. Holy cow. Got our moving averages up here. And load that. And we're going to see if we get a bounce off of that. We don't have any arrows to bounce off of, but right now we're looking at This is a nice big move. We don't know where the bottom's going to be. We haven't seen a little balance. Here's a drop, base, drop. So this is going to be the area that I'll be looking at for a retest. We don't know exactly where the bottom's going to be, but right now this is where it is. So I'm going to draw it from pretty much this red zone to the downside. If it keeps going lower, we'll just have to keep on moving that down a little bit lower. But right now, if we get a bounce off of this, this is the middle zone we're going to be looking at, which is right here where you see this. This is right where the retrace drop, the retrace, and then another drop. So this area right here is going to be key. This is the 68. This is where this is the magnet zone. This is the zone where everything's going to come back to. Once it bounces, it come back into this area to retest it. So we're going to wait for it to come back out of the lower 25. So here's our lower 25. Here's our upper 25. But this is going to be the area that's going to be significant for us once it bounces, comes back out. I'm going to go to my lower time frames, my 5-minute chart. We already have our zones figured out. Now, I can't do anything until I get across of the moving averages on this 1 minute. Get on the 1 minute chart here. We're now getting the 1 minute chart crossing over. This seems like it's the bottom. I'll slide this over just to tweak this thing just a little bit. And we're going to see if this thing comes out of the lower 25. But we have a little zone right here. And we're going to see if it comes up and breaks through this little zone and comes back and retests. Again, I'm going to be looking for a straw move out, come back in, and retest the low. I don't want to see it break this bottom. If it breaks this bottom, all bets are off. We got to start all over again. But right now, here's where the low is. It's pulling out. Since I have my zones already set, I'll just put these other ones in here just to make so you can higher confirmation here. So here's the right, there's the orange. There's the orange. Here's the orange. There's this is our magnet zone. Now we're looking, I can remove all these fib lines and redraw the extension, wait for the pullback, extension, wait for the pullback, up until it gets up into this zone. So we're trying to catch this trend as it trends on up into this area is what we're looking to do. But it's got to get a strong move out. It's got to get a pullback. And then we have just a small little stop looking for the next big move up. All very methodical, very mechanical. So now we're going to draw here's our low. And we don't know where the high is going to be. I'm going to guess it's going to probably retest one of these moving averages on that, probably retest this zone right up here. We'll see how high it goes in this area. Nice little push up. You see from our projected zone, right now it's in the middle third of our projected zone. We'll see if it's going to come up here and retest this upper 25 of where this area is. This little area is significant. That's the upper 25, just like we have the lower 25 for the pullback. British CAD sell. We already have that one figured out. Here, let's take a look at that real quick. It sold right into our trend line. And the CAD is still strong. So it's still strong to the downside. So right now it's not ready to be taking any trades. If the British pound starts getting stronger to the CAD, then we can take the trade up, but we need to get it to, right now the Canadian dollar drove it down, so that's got the strength. But now we'll see if the British pound can take over the strength on the upside. And so it'll give us room to get into it. Right now there's nothing here. Can't take it. Back to gold. Still waiting for the pullback. Right now it came right up to our 38. This thing probably still has some room to the downside, so we have a down move. So basically right now we're looking at it, the retrace of this down move coming back up, and see if it's going to retrace to come back down, retest this. So right now we have a little bit of a wedge. This is where you determine where your wedges are. There's a bounce point. Do we have room to take things short here? There to here. Here's our trend line. That's about a $6 move. Marginal. I like to see 10, try and get 5 out of it for these indexes in gold. Now, if it tests, as long as it doesn't break the bottom, if it retests, say, the 88.2% line, then we might have some strength to the downside. $7 there. I'll take this thing short with a really very small trend. Right now, let's see if it's bouncing off of this. If it breaks the trend line, I'll be out of this trade. So I'll take a really small position on this one right now. And we're going to put our stops and targets in. So I'm looking at a target of pretty much 1777. Take that one, take that one. $17.85. Where's, oh, that target's way up here. I could move that down. Move the stop way down into this area here. I'm going to keep it above. I'm going to keep it above that yellow moving average if I can. And see what we did. We used this for the reference. We didn't know how high it was going to go, but it came up to the strong move down. Here's the pullback. Made a trend line, hit a Fibonacci target. Now we're going to be looking at coming down here to the trend line. Now it may only come down into this area. We don't know how far it's going to go, but that would be my first target area. And like I said, if it breaks this trend line, comes back up, retests, I'll be out of this trade. Now I'm looking for this line right here to come back into the lower 25% zone of this whole range here. And I'm going to have my target being right. If this thing does reverse, I'll have my target coming in right into this area. See if it can break this. This is just projected right now, although it seems to be liking that line right there. My moving averages are in the right direction, And I could put my stop somewhere above this moving average blue line. So I can actually move my stop down a little bit lower. Because if it comes up and retests that trend line, then I probably want to be out of this trade. And if it doesn't break this and goes up and breaks the trend line, then it's probably going to reverse and head on up to the upside. All this was an early entry, expecting it to come down and anticipating that it may come back down and retest this low and maybe make a new low. But the dollar is relatively strong, so if the dollar is strong, the gold probably is going to be a little bit on the weaker side. Let's see, we got in at 83, and let's see, that's only a take profit of, that's about $5 profit is about what I'm looking at right now. We also have this little trend line right here. We have to figure out, is it going to break that? Is it going to break this level right there? Popped up a new zone, have our stop above the zone. Keep it out of harm's way. And we'll just see if it's going to retest this green zone. If it retests the green zone, I'll be out of this trade and I'll be profitable. Here's the upper zone, and here's the lower zone. And if I get another little strong push up and the screen moving average crossover, I'll be out of this trade and just at break even. This line seems to be holding, so I'm just going to pull this trade now. And so right now it's just trading between this zone up here and this zone down here. Could come up. If it breaks this, we have this zone, but we also have this little one right up in here. So I'd be looking at the target area being pretty much in this area up here, where that bright black zone is. Here's a little hook back. Green did not cross the yellow. Still has room to the downside, but I said it had a nice little bounce right off of this zone right here. If it can break that, then it's probably going to come down and retest this area where the green zone that the arrow indicator drew for us. So right now it's sort of in between these areas, this area right here. And until that, you just sort of play around. It's getting tighter and tighter, so eventually it's going to break through one way or the other. But I would not take anything right now until it confirms that's going to break this trend line to the downside, or it's going to break this trend line to the upside. And that's gold for you. And British CAD is melting away. And the CAD is strong to the British. Let's go to a higher time frame and see what we have for trend lines and things. It is breaking through this green zone right here. We do have this 200 moving average right here. That's a little bit of a problem area. And right now I'm going to redraw everything here because I don't know what I've got. This is our playground area. And let's see, that's plenty wide. So this is the overnight low. This is the overnight high. This is our new area that we're playing in. And right now we're in the middle zone. Yeah, we have this big green zone. Nothing we can do with it right now. This is the magnet zone, right where the green area is. Came on up, came back down, tested it, came back up, come again, testing it. If it breaks through the bottom, it's probably come down and retest this area. Now it did pull from here, it did pull out, came back up and retest. Here's our trend line. You look for that upper trend line, you look for the lower trend line, and then see if there's room in between those trends to be able to take a trade. There's your trend line there. Here's the bottom. This pivot is just getting broken right now. So right now we're looking for the anchor. This was the first, we have a little bit of a trend here that's just gotten broken. Here's a pivot, here's a hit, here's a hit, here's a hit, and now it broke this one, but we have this moving average, and then we're going to be looking at to see where we're going to get the hit from where the original range was and see where the retracement is going to be. We don't know where it's going to be. We're going to see, but wherever it bounces, that's where the second hit of this range is going to be, and that's going to determine which one of these lines is going to be the most important for us. So right now it's trading inside the 50 to 61% retracement of this big move. And we'll see if the 61 holds. If the 61 holds, then we can maybe try and take it to the upside, and we probably should have enough room. That's 21 pips. We have to wait to get that second hit. This one would have been it up until that got broken. Now that got broken way up here, but now we're looking to see where the next bounce is going to be. Could be all the way down here. It could be up here. We already know past that one. So this is the next target zone. Now if we take along here, then our stop's going to be down below here, below the wedge. But right now we're looking for the second hit on the trend line, come back up and then retest it to go up higher.
Al?
Yes.
Sorry, if you have time before this session ends, can you show everybody how your position size calculator works again, please?
Oh, sure. Yeah, let me pull it up here. Let's see, where is it? Okay, here we go. Okay, here's the, oops, I got to change places here. Can everybody see it?
We see your RCS tool. Oh, there we go. Okay, got
See
it.
it? Okay, all right. So here's the position size calculator. So basically, now we were looking at the Canadian US, the British CAD is what we're looking at. So I'm gonna come over here to the British, find the British CAD. And so we're gonna look all the way down here, see the British CAD, and pull that one up. And let's say you have let's just say you have a $1,500 account, just to keep it simple here. And you want to risk 2% of your $1,500 account, which means you're willing to risk $30. Now you have to figure out what your stop risk is. And so a lot of times we generally use, now if I'm on the indexes, you see this little drop down window. It shows like if I'm trading the US 500 on I use a 5-minute chart with a 100 pip stop. But in all the other currencies, I'm basically using a 40 pip. If you're using an hourly chart, you're more swing trading, you'd have a 100 pip stop. If you have if you're using a 15-minute, you're using 40 pip stop. But we use ours a little bit closer. But let's just say if you use a 40 pip stop with a $1,500 account with this pair, you can take a lot size of a 0.10 lot size. Now, I usually use a 15 pip stop with a 7 pip target. So if I change this, now keep an eye on this lot size. If I have a tighter stop, rather than 40 pip, let's say I use a 15 pip stop. Now, when I click on this, you'll see this lot size is going to be bigger. Now I can take a 0.26. So I can take over twice as much of a lot size with still risking 2% of my account. But this is my profit limiter. My stop risk, that's my profit limiter. So if I'm going for a 7 pip target with a 15 pip stop, I'm risking $30 if I get stopped out. But if I get my target, I'm only getting half of that. I'm only going to get 15. But that's just a lot size I can take. If I end up getting a 15, if I can get that 7 pip target into a 15 pip target, then I'm going to make $30, but I'm still only risking 2% of the account. Now, if you're on a 20% drawdown with a 15, let's say you have $1,500 in 20% drawdown, that'd be like using that's going to be your drawdown. That's 20%. That'd be like using a 2.5 lot size for a 15 pip stop loss. Now, if I increase that, if I'm swing trading and I have 100 pip stop with a 2% target, you can see the largest lot size I can take with a 100 pip stop, $1,500 account. The largest lot size I can take is a 0.01. Now with that gold trade I did, let's see if I have gold in here. I think I do. Here's gold. And I had a $4,000 account. Let's just say roughly $4,000 account. And I had a $5 stop. So that'd be.
Actually, yeah, you can see it on there as well. On that little pop-up box.
Yeah, so the gold, that's right. So basically you're using a 100. That's basically, that would be like looking at a $10 move. So if you have a $10 move and $5, I'm risking $80 for $4,000. But if you notice, when I took that gold trade, I only had a 0.01. So if I had a 0.01, I could have had, in order to risk that same 2%, I could have had probably about a 300 pip stop loss on that. More than that, 500 pip stop loss.
Oh, you changed your risk.
Oh, wrong one.
Changed the wrong thing.
Wrong one. That didn't look right. So let's say I did a 500 pip stop.
Oh, still, so 1,000.
So I could probably use I could use 1,000. Basically, I could use a $10 stop on that gold with that, and still only risk 2%. So I could have had a $100 move on that, and I still would have only risked $80 on a $4,000 account. So you can see that when I took that gold trade, I was way under what my availability was. And just because you have the room doesn't mean you take the trade, especially if you're not familiar with the pair where you're not comfortable with, like I said, I haven't had a lot of luck with gold, so I don't risk a lot if I take the trade to show you guys how to take the trade. And I'll risk that 0.01 on a gold trade for demonstration purposes.
Now, just quickly on your percentage for your risk, guys, like anything over 3% per trade is starting to get out of control as far as risking.
Yeah.
Like that's a lot.
Yeah, there's say like a Euro US. Take a Euro US pair, for example. Euro, that's basically a $10 standard value, $10. And you can see over here on the left-hand side, you'll see some of these pairs, like the Euro New Zealand, that's only a standard value of $7, which means you can take a larger lot size because the standard value is a lot lower. Euro US, most of your US pairs can be a $10 standard. And so if I risk, and I mean 3%, and actually a lot of times I'll use 3% for the most part. I rarely do I don't usually go over 5% unless I make a mistake. But like a 5%, and if I were to risk 15 pips, so if I had a $4,000 account and I'm risking 5% of a Euro US pair, and I'm risking $15, I can take a 1.33 lot size on that. If I go down to a 3% risk, I can take a 0.8. So anywhere between a 1.0 to 1.8, it's only going to be a 3% risk factor with a 15 pip lot size. But this is how it keeps you out of harm's way. I say 3% is moderately aggressive. 2% is, I would say, relatively conservative. So if Euro US $4,000 account, I can take a 0.5, and you notice most of my trades are right around the 0.5, unless it's an index pair.
I'll put the account to 1,000, just not 1,500, 1,000, just to put it in perspective for traders. Yeah. Okay, so you're willing to risk $20 if you lose your trade, right? Yep. So, you know, depending on what you put as your stop loss, that is going to regulate for you what your lot size should be. Yeah. So if you want to make your stop loss like 20 pips away, for example, you're still only going to lose $20 if it hits that, but your lot size is only going to be 0.10. So that's what's going to change for you. So calculate what your risk tolerance is. I would recommend, well, if we can't recommend, but if you're conservative, 2% is fine. Anything above that, you start to get a little bit more risk involved, and you can risk losing more of your account. Yeah.
But just keep in mind your standard risk, your risk level, that is your profit regulator. Whatever you're willing to risk, that's what lot size you take to maintain your profit value. Yeah. If you have a 20 pip stop and a 20 pip target, you'll make $20 on this trade with a 0.1.
Like I know some people like to put their stop loss way out there. So let's change that to, instead of 20 pips away, let's change it to 100 pips away, thinking, okay, it's not going to hit. But then your lot size, you see how it got smaller? So your position size is going to be only 0.02, because in the event that it does go horribly wrong for you and does hit your 100 pip stop loss, you're still only going to lose your $20.
Exactly.
So does that make sense to everybody?
So use this calculator. This will save your bacon more often than not, because that keeps you from over trading. And you think that, oh, I'm going to go for more money because I want to make up the losses that I just had on my last trade. No. You don't do that. You just take it and take what you can get, and just, because if you're trading correctly, your stop should really ever be hit. I would say I rarely ever take a full, if I'm using a 15 pip stop, which is oftentimes what I do. If I take a 15 pip stop, I rarely get a full stop out. The only time I take a full stop out is if I just say, I'm just going to set my stop, set my target, and hope for the best. Then I'll take a 15 pip. Most of the time, I'm out of the trade with probably 7 pip or 10 pip or less, because I'll exit because if the price action doesn't fit the picture I'm looking for, then I'll take a small loss rather than taking the full stop. But I would say probably if I can win 8 out of 10 trades with my target, I can take a one hit a couple times in that 10. Those 2 trades of the 10 that I get the full stop, I'm still profitable. If I put this thing up to a 100, and I let it, and I let the thing. Let's say it. Well, let's say if I do this, to 15, but let's say I let I don't let it hit my stop, and I let my risk go, and I go with the 10% risk factor, and now I hit my 100 pip stop. You're still kind of
$100.
You're still
1/10 of your account.
You just lost 10% of your account because you had too big of a lot size. So right now, the lot size with 100 pip stop, 10% risk factor, I'm going to risk $100 with a 0.1. I put this back to 2%. Now I'm risking rather 0.1, I'm risking a 0.02.
Yeah.
Now
So
I save my now you can still take that hit and not blow up your account.
Yeah.
Okay, that's about all we can say about that. Any questions about that? British cat is melting down, coming back into the lower 25. It did break now this trend line, we didn't know where the trend line was going to break. It did break there, but right now it's coming back down to retest. It's still retesting this pullback. So still in this, so right now it's ranging from the upper 20 to the lower 20. We'll see if we get the bounce and see if it comes back up here. If it bounces off of here, this could be a target of, that's a 9 pip target, 15 pips. So if I try to take this thing long right now, and my stop is going to be below this zone, that's going to be my 15 pip. That's well within my 15 pips target. So I have my 15 pips is down here. So I take this long. I'm looking for 7 pips. I'm looking for it to come back up and retest this area. My stop is down here. But when this thing comes up, if I can get my 7 pips and my stop is down below, I'm well within my risk level. And the theory is that this low doesn't get broken. I want to keep my stop below that, because as this thing pulls back further and further, I can take this thing down to, say it bounces off the 88.2%, so is down into the zone. Once it comes back out, comes back in, then here's my target. And I can even try and take it off this 88, assuming that it's going to bounce off of this. Now, if I take it along here and put my stop down below, if I'm right, I could risk an 8 pip stop for this target. And then this could be, and I could get an 8 pip target up into this area.
Al, we're after 9 o'clock.
Oh, my goodness. Yep.
I just noticed.
Time to wrap it up.
Flies.
All right. Any last minute question before we go? I don't know if anybody's in the other room or not at 9 o'clock today.
I think Dante's there all week.
Is Dante all there? Okay. I'll check out Dante then. And so any last minute questions, comments? Hope you learned something today. Stay safe, stay green, don't overtrade. Use that calculator. I'll check the email today and see, and I'll send it off to you when I check my emails here. So with that, everybody have a great day. Talk to you later. Bye.
Yeah, everyone have a great day. Happy trading. See you tomorrow.